In early 2025, high-frequency activity indicators point to some softening of global growth prospects. Surveys suggest lower business and consumer confidence in several strong-performing economies such as Brazil, Canada, and the United States. Indicators of economic and trade policy uncertainty have risen sharply to very high levels. Inflationary pressures persist, and recent inflation rates rose in 20 among 37 OECD and selected other economies with available data. In this OECD interim economic outlook, we project global GDP to grow at 3.1% this year and 3% next year, which compared with our last economic outlook in December is a downward revision of 0.2 percentage points for this year and 0.3 percentage points for next year. In part, this reflects the imposition or threat of new tariffs and the associated rise in policy and geopolitical uncertainty impacting on business, investment, and trade. Inflation is still expected to decline, but to decline more slowly than previously anticipated. We project headline inflation in the G20 economies to decline from 5.3% in 24 to 3.8% this year and 3.2% next year, up by 0.3 percentage points for this and next year compared to our projections back in December. The high policy and geopolitical uncertainty at present brings with it significant risks to these baseline projections. One risk is further trade fragmentation. Trade fragmentation could result in lower growth and higher inflation by discouraging business investment and increasing costs for production inputs and for consumption. In our simulations, the reduction in growth and rise in inflation will be particularly large in Canada, Mexico, and the United States. Another risk is that inflationary pressures resurge and that, as a result, monetary policy will need to remain more restrictive than expected.